even the best traders, myself included, get chopped up. Like this week, I got chopped up more times than I probably have in 3 months, right?
Welcome back to another episode of the Wolf Podcast. It's a pleasure having you on. My name is Gav Blacksburg, and I'll be your host today, straight from @Wolf_Financial on Twitter. And today we are bringing back, for the first time on our podcast, a guest. Yes, this was our most watched podcast. It was extremely highly requested that we do a part 2. So I'm very excited to welcome Manz at Not Mr. Manzel on Twitter back onto the Wolf Pod. Manz, how's it going?
Doing well, guys. How you guys doing? It's awesome to be back. You know, second time around is always the best one. So very excited to be back.
Absolutely. Yeah, with this opportunity of already being past those initial introductions, some of those initial insights, I was able to collect some of the most top requested questions from the audience. And I also pulled Twitter a little bit to understand, what do people really want us to dive into? And everybody wanted the charts, the data, the analytics. They really wanted to be able to see for themselves. So last time I was sharing my screen and showing a little bit of the charting. And this time we're going to be able to dive into your screen and take a look. So for people that are on here, you can already see we've got Webull pulled up here. We've got the QQQ chart as well as the level 2 data. And we're going to start out with a simple question here, but not so simple. And that is to Manz, how do you identify, as your sign says behind you, A+ setups, and then understand how you're going to position size into them based on how strong of a setup it is?
Yeah, absolutely. Well, so first off, that's an awesome first question. And I think that really my system involves confirmation points. So in order for a setup to be defined as A+, there has to be confirmation backing the trade. So in this case, guys, really, an A+ setup for me usually hits 4 confirmation points. And so for me, I am a very stick to the basics type of trader. My goal with the system is to, keep things as undercomplicated as possible. And so really, oftentimes my first confirmation point is going to be a level on the chart that I believe to be a key spot that I am looking for. So, for example, if we're on the QQQ chart right now, right, and I was to, kind of figure out a key level that I am going to look to, take a swing position, for example, I'm going to mark out that key support on the weekly chart at, in this case, right, we have the 275 area, right, that I feel like is going to be the key level on the weekly. And I'm just using this as an example, but the first thing would be, okay, hey, the setup that in this case is, at the key level. This is going to be my first confirmation point that I want to look to buy calls for a month out at a key weekly support level. So that's going to be confirmation point number 1. And then I'm going to look for additional confirmation points as well. So for example, I took a trade on BABA this past week, and one of the key confirmation points for that to be an A+ setup for me was the night prior. They had earnings this past Thursday morning. The night prior, I was going through Cheddar Flow, and I saw that there was a lot of activity put closing, which is a form of flow that I look at. And when you see puts being closed, that is oftentimes a bullish indicator for a stock. So, and I'm using flow as an example because that is another form of confirmation for me going into the trade, right? So it has to be a process of devolving. It has to be a process of putting together 3 to 4 really key points of information that are going to lead it to be an A+ setup for me. And so flow can be one of those. And in that case with BABA, having the put closing there the night before, understanding that, fundamentally, right? Fundamentals is another point of confirmation. If a stock has strong earnings, or it's had multiple price target upgrades, or it's drastically increasing its sales, those can all be fundamental confirmation points, which with short-term trading are not going to be as important, but they're going to be another point of confirmation. And I think that's the really important thing that people need to understand, is that an A+ setup isn't just one particular thing. It is going to be a culmination of different confirmation points that when they come together, lead to an A+ setup.
Okay, so one of them sounds like key level. One of them sounds like flow. I'm assuming level 2 data could be another?
Yeah, absolutely. So I am a price action trader at heart. Like I've spent, thousands and thousands of hours looking at these charts and understanding how price action moves, what a weak versus a strong tape looks like. And so for me, especially when we look at individual stocks, and a good example of this right now would be Tesla. And obviously, it's currently after hours, but if you guys, learn to really read the level two, and one of the ways that you're going to do that, and the main way you're going to do that, is by looking at the level two for hours and hours and hours. Level two almost becomes a certain feel, right? You can feel when the tape is strong versus when it's weak. And oftentimes you'll notice that, what you want to see if you're going long on a stock is going to be bids piled up here on the left-hand side, where you see this is the bid ask. So if you're unfamiliar, that's going to be showing where someone is willing to buy a stock. So someone is willing to buy, 3,600 shares of Tesla at 180, right? If we were in market hours, one of the advantages to trading individual stocks is you'll learn what a good bid is, what a good, ask is if you're short. And when you see large scale bid and asks, that can really kind of be another confirmation point throughout the day. If you see, constantly bids coming in on the left-hand side of that level two, that can really lead you to say, okay, hey, Tesla's got a lot of support here at 180, for example, because I keep seeing the bid get stacked. If I see a very strong level two on a long bias trade, that is definitely going to be a point of confirmation for me. Absolutely.
Where's the best place for people to learn how to read level two data?
Yeah, so I have a video on my YouTube about it. It's not as in-depth. It's more geared towards beginners. But what I really would say, and I'm telling, this is coming from someone who had no idea how to read level two when I started trading, level two is going to be one of the most powerful tools. I've said that if I had no indicators and just a level two and the chart itself, that I could probably make some profitable trades just using the level two, because at the heart of it, it's really the bid and the ask, and that's what's going to control price. So for me, really the way that I learned, honestly, was not by reading a book or not by watching any YouTube video. The way that I learned how to understand what a strong versus a weak level two tape looks like is really sitting at my computer from at one point 9 o'clock in the morning until 5 o'clock at night, and definitely soaking in the after hours and pre-market level two was just the screen time. And I really believe that is the most powerful tool in order to read level two, is really putting in those hours on the screen. And trust me, if you spend enough hours looking at that level two, you'll kind of, in a sense, become one with it and have a huge leg up going into your trades.
Yeah, because it does seem to just be data that flies by, right? There's so many orders coming in. There's so much going on. I don't want to get too far into this topic, but beyond, just watching it for hours, is there a way to kind of any settings that you're using on your level two or anything along those lines that kind of makes it a little easier to read?
Yeah, so first off, Webull, if you're using, Webull, it's probably the most commonly used options trading platform. It's going to have, a pretty solid level two. If you'd like to get a little bit more advanced, I have in the past used TD for level two, just because you're going to get every single, a more in-depth experience, we'll say that, to some extent. E-Trade is another really good one for level two as well. But combining level two with time of sales is I think a very, very powerful tool. No specific settings for me. It's really, like I said, I learned how to trade on Webull. I still trade on Webull every single day. And the level two that it provides has really been, like I said, a powerful tool for me going throughout my trades.
Perfect. Let's talk volume. What are you looking for when it comes to volume? How does it influence how you trade?
Yeah, no, so volume is really one of the best confirmation points to use. So, really a fantastic example of this, I think, is, if you really see, we'll use something like SE. They just had earnings this past week. And so what I'm going to be looking for is relative volume on the chart that I'm looking at. So this is going to be a very important confirmation point for me when I do my trade plans on the weekends. So if you guys have, followed me on Twitter or you've listened to me previously, one of the most important things that I do every single week is on Sunday night, I am, at the desk planning out my trades for the week ahead. Because when you plan out your trades on Sunday night, during the week, it really just becomes robotic execution at some point, right? And I think that that's a really important thing to understand, is having these trades planned out in the future, it really takes the emotions out of trading. And one of the biggest things that I'm going to be looking for on those weekend scans, I call it the Sunday scan. It's always been something, it's become an integral part of my trading career, is volume, right? And because volume is really at its heart, one of the most important things when you go into a trade. A stock needs to have good volume. Your trades are going to be smoother. There's going to be more volume on those options contracts when the underlying has good volume. And volume is really going to drive price. We've heard this all the time, but price precedes volume. So when you see a lot of really heavy volume coming in, so for example, like this week on SE is going to be, as you can see below here on the chart, one of its highest relative volume weeks that it's had in over 2 months. And that's going to automatically move something up or down on my watch list. If there's high relative volume on those larger time frames like the daily and weekly, it's automatically going to be at the top of my watch list.
Are you looking for, I know you talk about relative volume a lot, but are there any static numbers that kind of factor to the equation when you're doing these searches?
Yeah, well, and that's a great question. Honestly, every stock is going to trade a different amount of shares depending on how large the float is. So for a stock like we talk about all the time, well, CELH, right? CELH has a much smaller float, and therefore what is high relative volume for CELH. So for example, as you can see just from a basic overview, a high relative volume week for CELH is 20 million shares traded every week. Because you look and the average that it's trading is around 5 to 6 million shares. So a 20 million share week for CELH is 4x its daily relative or its average weekly relative volume, right? So it's all about relative volume because every stock is going to have a different float, and therefore what is high volume to one stock could be extremely low volume to another. 20 million shares traded on Roblox is extremely low, but for CELH it's 4x its relative weekly volume. So those are a very important concept to understand, is relative volume is going to differ depending on the stock you're looking at.
Do you ever gravitate towards lower floats for that reason?
I really don't. I think that I really think I could trade any float size, but I can, right? I do it on a daily basis. I'll go from a billion share float to, something that has a 200 million share float, right? Or Apple, right? You have like massive floats, right? So for me, I've always found success. I think that like 800 million to a billion share count is kind of a sweet spot for me, where I've always found that it's like you can get those, volatile price movements, but, price action and liquidity is still going to be very clean. So for me, I don't try to discriminate too hard against float size.
So let's talk about finding those key levels once more on the chart. You pointed out with the Q before, you said 275 might be a key level. Perhaps on coin you have some or others. Maybe you could pull up a couple of those charts and walk me through how do you find that key level of interest and then go about, supplementing it with the other confluence factors afterwards.
Yeah, absolutely. And so I think this is one of the most important, aspects of trading is, for me, it was learning how to work my way back. The reason that understanding how to work your way back is so important is because when in doubt, zoom out. That's probably a term that you've heard in the past. If not, it's a great term to understand. When in doubt, zoom out means that if you are in doubt about a setup, go to the higher time frame and look at it, because those higher time frames are going to be relied upon more, just because you're getting a broader picture and therefore more weight is going to be put into those higher time frames. So understanding what type of trader you are is first off important. But if I'm just basically doing my watch list, right, on the weekend, and I'm looking at Tesla and I'm preparing to take a trade on Tesla the upcoming week, I'm automatically going to come out to the weekly chart because I want to understand the broader picture first and work my way back. So if this was a Sunday night and I was just coming to, start my watch list for the week ahead, I would come over here to Tesla and I would say, okay, well, we have this key level on the weekly clearly, right? We've bounced off this level multiple times. That's going to be a key weekly support spot on Tesla itself, right? So we can tell that we have this key level at 178 into this 180 zone. Some people like to use demand zones where you can have like a $3 to $4 range. For me, I'd rather mark out where we've seen these weekly support bounces in the past, right? And then I want to come over and mark, okay, well, where is, my key weekly resistance going to be? Clearly, we had some prior support at that 215 zone on Tesla, right? And I'm going to try to do these as like a little bit more rangy, not to be too specific, but I'm going to go over to Tesla and say, okay, we've got a clear, old support at that 215 level on Tesla. Great. We know that going forward, that 211 to 216 area where you see these large wicks down, that's going to be a very important area and difficult area for Tesla to reclaim, because what was once strong support, and you can see that we bounced here for 1, 2, 3, 4, 5, 6, 8 weeks. That's almost 2 months worth of support at that 211 area. So therefore, if we come up in the future and try to test 211 on Tesla, we know that we're going to encounter a lot of resistance at that point, because it was a very strong old support. So first off, understanding the old support into new resistance and old resistance into new support mantra is very, very important, right? That's a concept that you have to understand when charting out those key levels on those larger timeframes. And then, like I said, I'm going to still, come out here and say, okay, well, where's my target if Tesla comes down under that 180 support on the weekly, right? Well, I can automatically see that Tesla had a major breakout, right? Once it cleared this area right here, which is that 154 level on the weekly, right? And I know that's going to be a very key level, because you can tell that we had a lot of resistance back here, right? Because we had a lot of trouble getting over that 154 level. Therefore, we can reasonably assume that will act as a strong support on the way down, because that was a major resistance on Tesla 2 years ago, right? So that's very important in understanding that concept. And that's really going to be at the heart of laying out my game plan on the weekly. And then I will come over to the daily chart, right? And this is where we're going to get a little bit more in depth as to, okay, so where are going to be my tighter time frame levels now that I have those really important weekly levels, charted out. Well, we can see here we had very strong daily support, or at least relatively strong daily support at this 203 price point, right? Now, when you get within $5 of a psychological number like 200, I always refer to the psychological number if we're within $2 or $3, but we'll say for now that 200 level acted as a very strong daily support. And so coming into this week, I know that that 200 area is going to act as resistance because we are now below it. Well, look exactly what happened this week on Tesla, right? Tesla, obviously, we came down below that 200 support last week, and then look what happened this week, right? We started the week off, we kind of drifted up, and then look at where we encountered resistance, right at that 200 level, and then we came back down off of it, and we found support at last week's low. So that's a perfect example of coming over to the daily chart and understanding on the tighter time frames how to identify those key support and resistance levels, and that really is going to be your roadmap as you head into the week ahead.
It's a really good way to go about finding these plays. Let's talk about once you're actually trading them. You usually are on a 15-minute time frame. What are you looking for within that time frame specifically? And then are there any other time frames that you're using when you're actively trading?
Yeah, so for me, this is a great question, and this one has a lot to do with volume, the market you are in, and how much liquidity there is. So the market environment that we were in 2020 is much different than the market environment we're in 2022. In 2020, you had, a bunch of Americans at home with stimulus checks trading in the stock market, right? And therefore, it's going to be a much more active environment. And when you have a much more active environment, you have very high volume. You have to usually use a smaller time frame because there is so much happening within that, condensed period of time, right? 1 5-minute candle can really be a huge deciding factor. In a quantitative tightening environment like we're in right now, personally for me, I have found more success using a wider time frame, such as the 15-minute time frame. That time frame for me has been my bread and butter. But that's just because of the type of trader I am, right? You have to understand the time frame that you trade on is going to kind of dictate what type of trader you are. For me, I found that the 15-minute time frame works well for intraday moves, and it is going to let me let the trade play out to its maximum amount of risk to reward, right? So for me, the 15-minute time frame has been my bread and butter over the last 18 months.
Awesome. And when you're within this time frame, maybe we can pull up a trade that you did this morning, which was Walmart, or we could pull up Baba from yesterday and just show me kind of what were you looking at when you went and actually took those trades. I mentioned those because I think they were both calls.
Yeah, absolutely. So let's look at Baba. Baba was a fantastic example. So first off on Baba, yesterday, obviously, like I said, guys, we had that bigger move on earnings, right? And so what I was looking at on Baba is really like the 15-minute time frame can really take away a lot of the deception. Like I said, on the 15-minute time frame on BABA, what I was going to be looking at here was looking at how healthy of a first 15-minute candle it printed off of the open, right? So obviously BABA had earnings. This is, sometimes referred to as an IV flush. The first 15-minute candle is something that I'm usually going to let form prior to me taking a trade. When I see BABA print a very healthy 15-minute candle like this off of the open and retake a key level such as 80, that is automatically going to show me, okay, buyers are clearly present here off the open. This one is in an established trend to the upside off of that first 15-minute candle. And something that I pay really close attention to is candle structure. So you can tell that this is a very healthy first 15-minute candle just by looking at the body of the candle, right? There's very little wick at the top, which illustrates that buyers were present the entire time through that candle. And you can see the continuation that we had, right, following that 15-minute candle. We had almost, the first 5 15-minute candles of the day continued in that, very bullish uptrend, right, until we saw some selling come in at the 85 level. So for me, I waited until 9:45. At the time, I entered the 85 weekly calls. A little bit of smaller size because I was trading a weekly expiration contract. And obviously we got really nice continuation off of that $80 psychological level retest. And then we got that upside move towards 85. And I think those ended up printing 338%. It was a Thursday, so pretty volatile move. And like I said, it worked out fantastic.
Yeah, those are awesome. Okay, really, really good stuff. I want to hit on a topic which was super highly requested, and that is the idea of letting winners run and cutting losers early, and how you go about finding the belief, conviction, confidence, patience when you're riding out these trades.
Yeah, absolutely. So again, I really want to emphasize, this is probably one of the questions that I get asked the most is scaling in and out, and why is it so important? First off, letting your winners run is very important, right? And I think that the way that I have, developed my system, right, is I am big on, locking profits when trades are hitting my targets. But at the same time, I want to let at least a portion of my position run with a trailing stop loss. So the way that I do that is really, pretty simple. So I treat my position as as a pie, right? And when I have that pie, I want to cut that pie in thirds and take risk off the table accordingly. So my general rule of thumb is when I have a trade, so for example, here on BABA, I had 3 targets laid out prior to the day, right? And this is where it's going to, be crucial to have price targets on stocks that you plan on trading, right? You need to have that done the morning before or the weekend before. So for example, on BABA, you can literally see exactly where I scaled out. My first scale was actually pretty early on, so I bought this retest of the 79.80 level. And then my first scale out was actually right here at this $81 level. I scaled out 30% of my position, right? And so that's the first, let's take some risk off the table. We are in profit in this trade. And then I'm going to take off, usually 65 to 75% of my position at my next price target. And then I will let the last 1/4 or 1/3 of my position run to kind of reach towards my reach price target, which in this case was that 85 level, which is where I scaled, the last 20% of my position. So having a system is going to be by far the most important thing when it comes to learning how to let winners run. If you have a system for scaling out, it's going to be a lot easier to let a portion of that position run when you have the majority of the position locked in with gains already. Once I'm usually in profit by 25%, my stop loss becomes my entry because I don't want to let a green trade go red.
For sure. And what about on the other side, cutting losers?
Yeah, so cutting losers is probably one of the most difficult parts of trading because it involves you to face your ego, face your emotions, because what that is you're admitting that you are wrong, right? And I think that, when you start out trading, if I could go back and do it again, I would probably start with a defined percentage stop loss. And once you become, a more experienced trader and you're trading, higher frequency and with more capital, everybody's going to tell you, and myself included, was a big believer in that system of a level, right, a key level on a certain time frame should be your stop loss, because you want the trade to technically invalidate before you cut it, right? You don't want to cut it before it technically invalidates. But if you're just starting out trading, having a defined stop loss like 20% is really going to help you conserve some of that market tuition and capital that goes into learning how to trade. And it really does get you in the practice of cutting losers early. So really, I'm not going to sit here and say that, I myself don't have, sometimes, I'm going to have a 25% stop loss on a trade and I'll let it go to 30% and I'll cut a loss for 30%, right? Like everybody, no matter how long they've been trading, is going to deal with that. But it's really about getting in the habit of early on, if the trade is not working, there is another trade on the other side. And you really have to get out of the mantra that that trade is the end all be all and it has to be a home run and it has to be successful. It doesn't have to be anything. That is just one setup that isn't working in your manner. And the way that I like to approach it now is if a trade is going against me, especially in a market like we're in right now, I will absolutely cut it, reevaluate. It's better to cut it and be done. Like today, for example, I took a trade on BABA. It went 25% in the green. I cut 20% of it. I took my first scale out, and then it came back to my entry, and I saw that BABA was kind of working against me a little bit. And I said to myself, it's not worth letting this trade become a loser. I've already scaled out a portion. I'd rather just cut it here at my entry and then kind of move forward and look at the market with a whole new outlook. So I think that's really important to get in the habit of doing.
Definitely. I think those are some great points throughout. And if people have, additional questions on that, definitely come to some of our spaces that we do regularly on a weekly basis, and we can dig in further to those concepts. But I just wanted to get the overarching thoughts.
And I would just say also, one last thing is really important to understand when you're talking about cutting losers. In the market that we are in right now, it is always better to lock gains earlier. This is a market where we are in a quantitative tightening environment. We're in a market that has less range, that has less liquidity. It is always better to lock your winners early on, leave a few runners, and then that is going to help you evaluate trading as a whole with a better mindset. So if you're newer, I would always suggest lock in those profits early on. It's better to be green by $2 than it is to be red. So that's definitely a big one.
Yeah, for sure, especially for people's mentality and their continuation in their trading careers. Absolutely. Okay, another question that I got, and then I want to go back to a couple other charts, is people wanted suggested books that you would suggest someone who really wants to take their trading to the next level should be reading.
Yeah, so I haven't read too many trading specific books. I'm more of kind of a mindset. If I'm going to read, I think it's important to kind of take advantage of the literature that is out there more from a mental standpoint, because trading is really 80% mental. So if you're going to try to train for trading with literature, I think your best bet is really taking advantage of some of the best authors that are out there about working on your mindset. All of David Goggins' books are fantastic. Volume Price Analysis by Anna Cooling is one of the actual trading books that I have read and could recommend. And you'll see a lot of the people that I'm good friends with recommend that book as well, just because of how impactful it has been learning about the importance of volume in trading. So I think that's going to be the one trading related book that I would really recommend.
Perfect. For these lines, these scale out lines on BABA, I know that you were looking at BABA on your Sunday scan and you pulled out to the weekly and you found different items on it, but where did these lines end up coming from? Did you implement them on the weekly and then go in on the 15-minute? How'd you end up setting these specific spots?
Yeah, so BABA is one of those stocks that I trade on a very regular basis. So it's a stock that I've kind of been trading really since I started trading options consistently, and therefore I'm going to have some preset levels that are already on the chart itself. But to answer your question, the night before, what I did is I came out and I said, okay, we've got this really nice put closing activity on BABA. Let's see where it really needs to reclaim in order to see a big move, right? And so if you come out to the BABA weekly, because that's always going to be the first time frame I look at, I'll come out and say, okay, hey, we've got clear weekly support, what was weekly support at this $80 zone, right? And up to this 81, 82 level, right? So I definitely come out here and say, okay, listen, we've got, strong resistance on the weekly now because this 82 level was such a strong area of support in the past, right? And so for me, I knew that the 85 level on BABA was a huge area on the daily because we had so much support there in the past. If you come out and look at the daily chart, because remember, we always want to work backwards, you can come out to the daily and say, okay, clearly the last time that we ran, right, which was in early October, we stalled out at the $86 level. So the night before I came out and said, okay, my target in this trade is going to be that $85 to $86 level. And that's why you saw my last price target was that 85. That was my reach price target. And the reason that it was a reach price target was because you can see we had a lot of selling come in here at the $86 level on BABA the last time it ran, right? And we clearly had resistance, which was then support, right here at this like 81, 82 area, right? So 82.10, that was my first target on BABA, right? So in between that $81, $82 zone, I was actively scaling out because I knew that was an area that, again, we were going to encounter some resistance at. We ended up ripping right through it. And like I said, when I saw that, I held those last few runners up to that most recent daily high, which was that 86.29 area. We sold out at 85. I sold my last few runners right around that level. So
For sure. I think those are some great points. One other question that I did have is, what wicks typically mean to you? Large wick on the top side, large wick on the downside, a series of wicks. What does that mean to you?
Yeah, absolutely. So, candle wicks are very important. And I've, again, said, candle structure is just so important, especially when you talk about the daily time frame. I use, actively look at wicks on shorter time frames as well. For example, on BABA, right, you see how we have this long upper wick, and then the following day we had an indecision candle, and then we had that, kind of confirmed downtrend set in on the daily, right? So when you see large upper wicks like that, it indicates selling at a certain level, right? And, I'm not exactly familiar with what BABA was doing at the beginning of October, but when you are in a more bearish market and you see those long upper wicks, that really illustrates sellers coming in at that price level. And so what that does for me is it allows me to set a area where, in the future, right, that's going to help me determine, I know sellers are going to come in at 85 or 86 because on our most recent daily high, we had a lot of wicks, a lot of long upper wicks at that price point. So for me, if I'm long on the trade, I know that that's a great reach price target area because I know that we're going to encounter a lot of selling at that spot. On the inverse, if I see a lot of, like long lower wicks on the daily, right, if we have, a lot of buying pressure coming in on larger time frames and that candle body is being pushed up, that's going to illustrate to me that we have a lot of buyers coming in and that they're pushing that candle body over, whatever it be, a key support, right, or a past like weekly support area. So those candle wicks are going to be very important to me because they are illustrating where those buyers and sellers are really pushing that candle body.
Perfect. Okay, let's just do a couple more charts and then we can wrap up from there, just so people can kind of see how you're taking these techniques and applying them across different stocks. Sure. Rivian.
So Rivian is a great one. This is going to be an example of, some people call it liquidity sweep. I like to call it a daily candle trap. So for example, we are looking at the 11.9 and 11.10 candles on Rivian. So they had just gotten through earnings. If you look at the candle from the day following earnings, which was 11.10, and this is pretty recent, so this will be a good example, you can see how the wick of this candle extends below a key area of support on the daily, right? We knew that this was a key area of support on Rivian at that 32.50 area. That's been a key level on the chart, pretty much its entire life, right, as a stock. And so when I saw that daily candle, which you got to give me a second to get back to here, but okay, so you can see how the wick of this candle extends below, and then you see how the body of it closes back above. That for me is going to be a daily candle trap, and that's something that I've kind of created as my own saying, and it's one of my favorite setups to play because what is being illustrated there, and some people again call that like a liquidity sweep. For me, that's a daily candle trap where you are seeing the candle or the stock itself sell down in the beginning of the day. So you get a lot of people in there on the short side because, in the past, once it's broken that level, it's seen big moves down. So you get a lot of people that come in on the short side. But what happens is what this is illustrating, the long wick down, is illustrating that at the end of the day, we saw a lot of buyers come in, right? And it actually ended up that the body of that candle closed above the key daily support level at that 32.50 area. And so when that happened, you had a lot of shorts in the stock from earlier in the day when it was below a key daily support. It actually closed back above, and then look what happens the following day. We get almost a $2 gap above, and we get a huge move to the upside on the options. And I actually believe I traded that setup exactly with an overnight, and it ended up printing like crazy. I think it was a 300 or 400% trade right off the open the next day. So that is one of my absolute favorite setups to play, is the daily and weekly candle traps. So
I definitely remember that one. That was really good. Let's pull up the Walmart maybe 15-minute and see what you saw this morning.
So right now we're looking at the Walmart daily. First off, I need to kind of start on the daily again, because this is the reason I was looking at this setup was because of the daily chart. So this is what I like to call, you have basically a power earnings gap up. So we can see Walmart reported earnings here on 11/15. They had that initial gap to the upside, right? And then we pulled back, consolidated, and we've kind of formed that post-earnings type of bull flag setup where, okay, we've got a really nice, bullish earnings report. That's a fundamental confirmation point. Coming into today, we retested, that initial breakout level at 147. And then today I noticed that we held the prior day's high. So if you look on this daily candle, 148.73 was our prior day's high. And then if you look at the 15-minute candles from today on Walmart, off of the open, right? And so this is our first candle of the day. I noticed that we held that prior day's high. So if you look at that daily candle from yesterday, like I said, it had a high of 148.73. That first daily candle, that first 15-minute candle this morning off the open, we held that level extremely well, right? And when I saw that we were going to hold that level on that first candle of the day, I actually entered the long side 150 call weekly as a lotto. And then once we held that prior day's high, we actually pushed all the way back up to 150. That's a huge psychological level of resistance. So I ended up taking the win on the trade there at the 150 level. But like I said, it ended up being a 60 or 70% move on those 150 calls, obviously because they were expiring today. But with some small size, that was a really nice trade to start the day off.
Yeah, for sure. Okay, let's take a look at coin. And I know this wasn't one that you traded today necessarily, but just curious from the setup on the chart, how you read it.
Yeah, absolutely. So, coin is one that I have really loved to trade in terms of on the weekly time frame. The reason why is that, for a long time, we had this really nice weekly trend from its May low. And what I would do, honestly, is I would trade this trend line. And I'm not a huge trend line person, but on larger time frames like weekly, even like daily or monthly charts, I will look at that weekly trend as a really important source of confirmation, right? I probably traded coin every single time it hit off this weekly trend line because we would consistently get, an $8 or $9 bounce when we touched that trend line. And it was almost like every time it happened, right, until we most recently broke that trend line. Obviously, the stock saw a big move down when that happened. But you can see that weekly trend line from its May low had been pretty consistent. We would hit it, bounce $10 or $12, right? We would hit it, bounce, hit it, and then bounce, $15 or $18. And then look at long wick down, hits right at the weekly trend line. And then the next week is the week that it went to 120, from like 58 the week prior. So I learned to play that trend line for really clean bounces each and every time. It respected that weekly trend a lot. And so for me, I really found that I was able to consistently play that weekly trend on a stock that I was familiar with the tape. I was familiar with the level 2, and I really had a good feel for it. So like I said, that was a way that I, kind of would plan out trades on something, like a stock I'm familiar with. Like Coinbase, on a regular basis, was just using those weekly trend line bounces for pretty much easy gains, throughout the summer. So
I love it. Okay, I think we're good on all the chart stuff. I got one last question, and then I'll let you go. My question is, there's a lot of traders that are frustrated right now, right? They feel like they're putting in time on a daily basis, but maybe they are getting into a trade, it drops down, they sell because they want to cut, it pops back up, right? They feel like they just can't do something right. Maybe this was, you in the beginning days. What do you wish? What's maybe a piece or two of advice when you first started trading, when you were first going through those initial struggles? What do you wish someone could come and like really just hammered home for you that would have taken your career to the next level?
Sure. Yeah, I think without a doubt, unequivocally, the most impactful thing I wish I could go back and tell myself would be to trade with more time. So you don't have to trade weekly contracts. You don't have to trade SPY, 0-day expiration contracts. Trade with a month of time, right? Because one of the most common reasons that traders get stopped out is because it hits their percentage stop loss, or they, see a big drawdown in their position and they're losing money. So trade with more time and allow yourself to understand why the trade is happening. This is a very difficult environment that we're currently in. Even the best traders, myself included, get chopped up. Like this week, I got chopped up more times than I probably have in 3 months, right? And so in an environment like that, adjust your expectations first off. I would go back and tell myself, hey, you don't need to 10x or 20x your account right now. Focus on learning why the trade is happening and give yourself a little bit more time. Even if you're trading a week or 2 weeks out, having that added cushion is going to reduce that stress, is going to reduce that frustration, and is really going to accelerate your journey into being a consistently profitable trader.
Love it. Hopefully we can get that sound clip right into the ears of all the 18 to 19-year-old traders in the world. I'll do my best to deliver it. Manz, it's always a pleasure having you on. Our first podcast was a smashing success. We obviously do weekly live shows where we're bringing in a ton of information. I'm glad we got to do this. Anything else you want to share before we close out?
No, I would honestly just, kind of reiterate the message that I just gave, which is, if you're getting discouraged in this environment, I totally understand that. And I think it's totally warranted. But just remember that if you put in the work right now, it is going to pay later. There's going to be that time where the market is incredibly, incredibly hot. And like I said, the work that you do now is going to reflect a year from now. I wish I could have told myself that in the beginning. Is what you do now is going to show in a year. So make sure that if you're putting in that effort, you're consistent about it and understand that it is part of a bigger process and you're going to get there.
Perfect. Love the message. To anybody that's listening, if you did make it this far, go ahead, drop me your thoughts on Twitter. A bunch of people dropped their thoughts last time. I responded to every single one of them. My @ is @wolf_financial. Manz is @not Mr. Manzel. We'll throw those on the screen in the beginning of this video. To everybody that's listening, I hope this was super helpful for you. Again, if you have any other questions, maybe we'll even do a part 3 if enough people DM me important questions that they want to listen to. To everyone else, safe trading, have fun, keep learning, don't stop. This is one of the hardest times ever to be a trader. So some days you're just going to need to sit back, but never stop learning. And with that, hopefully we'll see you on the next podcast.